Welcome in everybody to another round of Community Capital Live. As everyone is joining, I'll go ahead and make our introductions. Really glad to have everybody with us today and really excited about today's conversation with Christina Jennings from the Shared Capital Cooperative. I am really actually very excited to get to dig in with her on the work that they're doing. Um, Community Capital Live is a bi-weekly, roughly bi-weekly show that we do as a collaboration of a few different entities. And I want to make sure we shout out all of our partner groups here. So first and foremost, I want to make sure we shout out the Main Street Journal, where is your hub for local investing across the country. Also want to mention Neighborhood Economics, which is where impact investors, social entrepreneurs, and people doing work in social justice join up and get to learn from each other. The next conference is coming up in the spring in Asheville, North Carolina, where I am located, along with Kevin Jones from Neighborhood Economics. We also have Impact Alpha, who is the place to go for all your impact investing news and learning. And the Mindful Marketplace Show is a show I host on Biz Radio US about shared ownership businesses, community capital, and social entrepreneurship. So check us out on bizradio.us. Our panel today, I am happy to get to introduce, as always, our fearsome twosome here, our 1-2 punch of Michael Schumann, who is not only the editor-in-chief of the Main Street Journal that I mentioned before, but also the author of several books on investing your money locally. His books were really what turned me on to the entire world of local and impact investing 10, 15 years ago now. And if you haven't read any of them, I want to start with the most recent called Put Your Money Where Your Life Is. I'll also have with us, very grateful to have Kevin Jones, who is the co-founder of
Hello.
SOCAP, the Impact Investing Conference. He is also the co-founder of Neighborhood Economics and some other things too, like Impact Hub and some really other great organizations as well. So, Kevin, really glad that we get to have such a good panel here to get to dig in with Christina. But Christina, I want to kind of throw it over to you. First of all, thank you for joining us today. We are so happy to have you.
Thanks so much, Joel. I appreciate it.
Yeah.
And
So first, oh, go ahead.
no, I was just gonna say I'm getting a bit of an echo on my end, so I'm gonna try to fix that. Go ahead.
Okay. I don't think I'm hearing it on my end, just so you know. But could you tell us a little about the Shared Capital Cooperative and how it really came to be?
Yeah, I love our origin story because back in 1978, there were a group of cooperatives that had really been struggling to access capital that they needed. And the story, as I've heard it, was about five cooperatives came together in the back office of one of the food co-ops locally and said, what are we going to do? And they organized a little move your money campaign to move their money out of local banks that they couldn't get loans from and pool that money together into a small mutual aid revolving loan fund that they would sort of take turns borrowing from. I particularly like that it was $4,500 at the time. Uh, I did the math a few years ago. I haven't updated it with inflation in the last 2 or 3 years, but it was about $7,500 by 2022 dollars. So it was as small as it sounds. Um, but it was a time when there was a lot of inflation, similar to now, and there was a real need for access to capital to buy the equipment and inventory that they were trying to keep on the shelves. So they really took that upon themselves. It's also interesting that initially they organized as a nonprofit. So for the first 10 years, they operated as a nonprofit. And then in the late 80s, they decided that, in fact, or about 10 years later, they decided that they wanted to be a cooperative to really reflect the values that all their members have, because it was a loan fund created by and for cooperatives. And so they actually converted to being a Minnesota Cooperative Association owned by the co-ops that were borrowing from the fund. Folks would rotate in and out of borrowing over time. New members were always welcome because the whole purpose was to expand the cooperative ecosystem, and so bringing new cooperatives in to the cooperative association was part of the the intent and purpose of it. So yeah, so today we're about a $26 million fund with about 300 cooperatives around the U.S. In nearly 40 states who are members, who can borrow and invest in the fund, and they democratically govern the fund. And our whole purpose is to make sure that cooperatives have access to capital. So yeah, that's the basics.
Yeah. Well, and we're, one of the things we always do here is we like to dig in a little bit on the nitty-gritty and everything, which we will do. But what I want to ask first is sort of on the big picture, kind of going back to that moment where the fund is created and then the decision gets made to actually turn the fund into a co-op itself. And I'm curious, like, how do you feel like that changed the evolution of the fund? How might it look if that hadn't have happened, and how does it look now because it did?
Yeah, thanks. That's a great question. I think you know, it was literally a chance for the members to put up money to make sure that the fund had an adequate base of capital. So, it allowed for investment by the member cooperatives, by the cooperatives who wanted to access this money. It really also gave them, you know, governance and ownership of the fund. So they were making the decisions collectively, electing a board of directors. So today we have an 11-member board of directors that is democratically elected by our 300 members. And so that has remained true. We run competitive elections and nominations and election process so that folks from our membership can help govern the fund. And I do think maybe one story I would share to illustrate the difference. I came in 2008 at a time when the fund was facing some challenges. We had experienced some losses as we had tried to advance affordable housing issues in just before the Great Recession. And as folks know, housing was hard hit, and as that started, we were feeling some of the effects of that. And we had taken some big risks to make some new affordable housing, democratically owned housing available. And unfortunately, they were not spared the impact of some of the housing challenges. So as I came home, I think there was a real question of whether we were going to continue to do this work or whether we were going to kind of wind down this work in order to, kind of allow folks to recover as much of our members and investors to recover as much money as they could and close out the loans and all of that. That was a question on the table. And as we did that, our members really, I remember a meeting that I attended, and the members really stepped up and they said, look, we've invested in this. This is a fund we're committed to, and we're going to put more money into it. And they really did. We went out to our members, large and small, and they put more money in. We created a new equity investment option so that they could actually help us build our equity base. And they really stepped up in a way that, I think is unique because it was member owned. It's my impression that if we had been a nonprofit, really focused on stakeholders being the foundations and investment groups that were invested with us, rather than the members who wanted to see the access to capital, we probably would have closed our doors in 2008 or 2009. And I think that is an example of where that member ownership really makes a difference
So
and
too,
turned ourselves around.
yeah, so too decentralized to fail, maybe.
Yeah, and members really felt a stake in the future in a
Hmm.
way that maybe an outside investor or foundation might not. They saw their access to capital, their future access to capital, as something that depended on the existence of the fund.
And then on the last bigger picture question too, on the impact side, what are the things that you are either most proud of for the fund? Is what do you look at when you see as the impact? And if someone were to say, hey, why have you done it this way? what are the things you can point to as to the results you've been able to get for your community?
I mean, I'll start with just a couple of high level things to start with. We've made about 1,000 loans to cooperatives all over the country. We've invested over the years about $80 million, leveraged a lot more. I don't have that number at my fingertips, but we've leveraged a lot of additional money because we often partner with local funds and local communities. So I think those are really important. But I think the stories of cooperatives that have really succeeded because they had access to the capital, who were able to create democratic workplaces through worker co-ops or food co-ops that have been able to serve their communities with access to healthy food, housing co-ops that have really been able to provide a steady base for residents so that they could remain in their communities in the face of gentrification and rapidly rising home prices. Those are the specific stories, and those impacts are really the ones that, of course, matter the most. And yeah, I'm happy to share some specific some anecdotes.
Hmm. Yeah, yeah, for sure. Well, and I know we'll probably get into more as they come up here. I want to kick it over first to Michael to be able to follow up with questions here about I know that you're always chomping at the bit. You got your notes ready. So our professor, Dr. Schumann, maybe not doctor,
Yeah.
but
Well, so one of the things I'm really curious about is the legal structure. Did you have to register as an investment fund to do what you're doing, or were you able to squeeze within the four corners of just being a producer cooperative? And how did you do that?
Yeah, the securities questions of this have been interesting. Right. So as a cooperative, there are things we do that are unique because members can make member equity investments with us as a cooperative and under the framework of, so we're a cooperative association. Their membership equity is an important part of our equity base, and it is part of our, part of our capital base. But they are able to do that within most states. There's some exemption for cooperatives. Um, on the other hand, we don't, unlike some of our peer funds, get to benefit from the registration exemptions as a nonprofit because we are not technically a nonprofit association, even though we are not passing profits to outside shareholders. So that does create some challenges, and we worked for years under a private placement offering because that was our best way of operating. And private placement offering was sort of the anti-marketing uh, option. You can't put anything on your website. You can't talk to anyone you don't already know their financial statement, as folks know. So we did that for a long time, and it was really under some of the new investment options. We launched a direct public offering under the Regulation A option. These are one of the options that came out of the Jobs Act, and that allowed us to finally accept more easily investments from both accredited and non-accredited investors to because in some states we could, in some states we couldn't, depending on how they view the cooperative structure. So this allowed us to more uniformly, and so we can through our recent offering, and we're in the midst of re-qualifying a new offering with the Securities and Exchange Commission. Under those, we are able to take investments from both non-accredited and accredited in nearly every state.
And do you take investments not just from co-ops, but also from individuals?
Yeah, we can take investments from anyone, individuals. So originally, cooperatives were our key part because of trying to navigate with the securities laws. We've also always had some individuals investing, and we've also had religious investors and others, foundations, and so on. Under the new offering that started in 2021, we could really expand that so that it could be individuals much more broadly, or much more broadly accessible to individuals. And so we've done that. And now we have over 300 investors in our fund. We accept investments from $500 and up, really with the goal of making that our investments very accessible to folks who are committed to this.
Do particular co-ops have to join before they qualify for receiving a loan from you, or can a new co-op that's got nothing, can they apply to you?
Yeah, we do require co-ops to become members to access a loan, but they can apply, go through the whole process, see if they can get approved. And if they're approved and are going to receive the loan, we can actually help them finance that equity purchase that's required at the time that we give them the loan. So the goal is to make it accessible, but it is to remain within our member-owned and member access pool. So yeah, any co-op can apply, and so we really try to reduce those barriers.
And if you had to generalize where most of the loans are they going for capital improvements, technical assistance, finance? What's going on?
Yeah, there are a lot. They're big range. There are a lot of we do finance some acquisition of real estate for housing co-ops and for other cooperatives who are, for example, co-ops that are trying to secure their building in their community so that as prices rise, they can keep their location there, or housing co-ops who are trying to, provide housing for their members, but also cash flow loans and loans to bridge grants is an interesting one. So you get these terrific grant programs, government, and we won't go there, but if there were access to grant programs and sometimes even foundation grants that operate on a reimbursement basis, and small businesses, including cooperatives, often can't put up those dollars ahead of time. And so we provided bridge loans so that, for example, the Washington Hmong farmers in Washington State could buy equipment and then get reimbursed by the state of Washington's Department of Agriculture, U.S. Department of Agriculture, through their grant programs.
So I have two more questions, then I'll pass it on to Kevin. So one question is whether you're at a pretty big scale compared to a lot of other funds that we have looked at. And does that scale enable you to cover all of your administrative costs? Are you a break-even or better operation overall now?
Yeah, I love, we're sort of, in some worlds, we're sort of viewed as big, and in the rest of the world, we're viewed as tiny. But you're right, Michael, compared to a lot of these really great projects going on, we've been around for almost 50 years. And so we have grown, 26 million. We're bigger than many of them, but no, I think that 20 million in loan portfolio was the holy grail of self-sustainability for a long time. And now if we finally hit that a few years ago, and of course the numbers have just gone up.
So do you have a new number that's the holy grail, or
I don't know, folks say 50 million. I think our projections would say 50 million.
50 million. Okay.
Okay.
Just keep us running. Right?
That's good to know. And for most of the loans that you're giving, is there also a separate line of technical assistance that you're giving, especially to early stage co-ops?
Yeah, technical assistance is incredibly important. So I agree that we want to see that is built into the budgets and projections that we're financing. I would say because we don't have grant funding to provide to the co-ops. What we're doing is, building it into the loan so that they have that as part of their resources, and often requiring that they have a plan for technical assistance. We want to see that they have support around them. I mean, there's so much complexity to running a business, especially some of the great businesses that we've had the chance to work with, but making sure they have that assistance with the governance, with the business itself, all of that. So yeah, we do try to finance it.
So I got to sneak in one more question, which is on the technical assistance. You've got a broad enough membership that it seems to me that you can set up communities of practice around given types of co-ops, for example, grocery co-ops. Does that happen, or is that done elsewhere?
There are some groups that have formed over the decades that provide those. And so now we we tap into that, the national co-op grocers, or um, the some work around employee ownership, for example. So we've been able to tap those existing networks, but within our network, there are some great resources, and we have some great examples of groups that have created peer connections. We've been able to make introductions and create peer connections. Examples of worker co-ops that have very seasonal businesses, and that's hard when you want to protect your member, your employee, your worker members from, you don't want to lay them off every winter when you're running a bike shop in Minneapolis or things like that. So we've been able to connect groups that are operating within the same sectors to learn from each other, who's figured this out, who has ideas. We've had examples also with food co-ops where folks have provided guidance on overcoming particular issues they're facing. And I think that part of our cooperative structure, the network of co-ops, it's also how often folks find us, because they tap into that network and are able to say, oh, this is a place we can get access to capital. They can get firsthand information about that process from others who borrowed. So
Right.
yeah, absolutely.
Excellent. Kevin, over to you.
Okay, thank you. So let me okay, I'm unmuted. Good. Thank you. So Christina, as we were saying beforehand, we were about to work with your firm. Prior to the pandemic, I was working with some Somali refugees on a no interest mortgage plan that was going to be a hybrid cooperative. And working with them, I realized, interest there's a reason Moses said, hey, you shouldn't do this. It puts the thumb of the, investor on the scale at the expense of the entrepreneur. So I've stayed away from that and done revenue share and equity and those sorts of things since then. But there was also this imam who said, look, the standard thing, and this is just kind of under the hood, but I'd love your response. The way co-ops get big, they do non-voting Class B preferred shares. And this imam said, look, preferred is as bad as interest. Preferred means you get your money before the person who creates the value. We can't go there. And it's like, oh, there are all the ways these really creative Islamic faith leaders were saying, let's be fair and just. And so it's like, people are used to Class B preferred, but actually, it's a little place where the investor has their thumb on the neck of the entrepreneur. And I'm wondering what your thought about that is, because it's standard practice, but I think it's wrong.
Yeah, Kevin, that's a great question. I mean, there's a lot that is really challenging in interest on loans and the structures of preferred shares. Granted, we're working within and trying to adapt systems that have a lot of challenges. We do think that our structure as a cooperative allows, some ways to mitigate that, because our members are the ones ultimately making decisions, and they're receiving they're kind of primarily the benefit receivers of our
you don't
success.
have big Class B preferred that are coming in with non-voting?
We do see that, and I think I appreciate the sophistication of the analysis, because I think often we hear folks saying, well, equity investments are better. And it's like, well, they are, but they often carry control. They often carry and the return. And so I think you're right. I don't think I have a solution other than our approach is to try and make sure that the democratic ownership, it's not a single investor who has the decision-making authority, or a small group of investors who are driven primarily by financial returns. And for us to look for investors who are committed first and foremost to the social purpose of rather than the return. But you're absolutely right.
I mean, it's hard to argue with these imams once they look at you and say, that's not fair. You're getting more than you should. And it's like, well, damn, I never thought about that. I've done Class B preferred a bunch, as an investor. And it's like, damn, I was wrong. Okay. Two things. I've been really entranced by Poder Emma here, which is a network of cooperatives that's followed the model of the industrial commons, which was this network of cooperatives in textiles. And they have recycling co-ops, they have bookkeeping co-ops, they have all kinds of circular economy. And Podera does the same thing with the language justice. And they started buying the land under their trailer parks. And now they've got a commercial real estate cooperative, a commercial real estate management, a language justice co-op. And that model that I sent the link to you of that book, Assets in Common, it seems like, when you share the returns within a network of cooperatives and find a place where somebody should have governance right over here, just on the bookkeeping part, you create more community value. And I'm wondering if you're seeing more of that kind of network model like the industrial commons.
Yeah, Podera, Emma, and the Industrial Commons are great examples of really creative work going on, and we know those organizations and love the work that they're doing. So I do think the network of co-ops can be a very effective strategy, support for each other across a local community or a local region. And we're doing some of the same things, but in a broader geography. And the further you get from local, the more challenging democracy gets, the more challenging that kind of sharing of information and knowledge and mutual support gets. So we acknowledge that by choosing to work at a national level, we have some we lose some of the nuances and some of that, but I think we're able to retain others. But we do see some groups doing that in different communities as more and more co-ops grow up into. We've certainly seen in some of the longstanding co-op communities, for example, Madison, Wisconsin, that's had a lot of cooperative activity, or Austin, Texas, where there's an ability to provide support across sectors. And then I think there's also the opportunity for those groups to connect across the country and come together as ways to support a solidarity economy, especially at a time like now, when that kind of alternative options is so important.
Right. I went to an event in New York last year that was like, now is the moment for employee ownership. And Ford was there, and Rockefeller, all the big foundations. And, you had to wear some shoes that were shined, that kind of thing. You're in Manhattan. And, has that really been a moment, or was that just a little blip?
I think that there has been a moment, there's still a moment. I mean, that's the circles where we're viewed as too small to be in, right? we're sort of too small to be there, and because we are lending about 5 to 12 million a year, and that's just not the scale that some of those players want to see. And there are good reasons why we want to keep doing what we're doing. We're trying to do small dollar loans to a lot of co-ops. I mean, our average loan size is about 200,000. That's a lot of projects to put out. But yeah, I do think that employee ownership, what we have been seeing is really, really strong financial performance, but also really strong workplace culture and retention of employees through those conversions of existing businesses to employee ownership. So I don't think that moment is over. I think there are challenges with reaching kind of new rungs of businesses where the owners may be less inclined to support that transition to employee ownership. But I don't think we've maxed out the businesses where that's still a very real opportunity. We've just seen some really great examples of success. So we're working mostly with firms that are, say, 5 to 50 employees. And I think there's a lot.
So as a quick follow-up to that, is there a gap in the market between these big dogs trying to say, hey, I'm in here, yes, and you guys who've been here for half a century? Is there a gap that needs to be filled?
Yeah, I think remains a gap throughout gaps throughout the system. So there are these really great grassroots initiatives that are looking for capital. We're a longer established but still sort of smallish fund in the world of funds. There are groups that are interested, who have been interested in supporting this, that are looking for places to drop much larger dollar amounts that will work for them. So I think that collaboration among different funds, we have a lot of collaborations already with other CDFIs and that are working with cooperatives, or CDFIs who are open to working with cooperatives. I do think there's opportunity for some of those gaps to be filled through collaboration. I think that makes a lot of sense. But I do think there's also a lot of room, especially as we see a lot of questions about where federal money will be going over the next 4 years, to look for opportunities to put more impact investor dollars in, and folks who are willing to not take, not have control, not have, but maybe have a say, and folks who are looking for a return, but not a high return, and are willing to put their money in to really support really powerful grassroots work that's making a difference. So I think that those dollars can help fill the gap, but yeah, I think there is still a significant gap.
Okay. Well, I want to open it up for other folks to ask questions. This is interesting to me. Thanks.
Yeah, me too. And I want to, Nicole from Equal Exchange, who's one of our most regular attendees and contributors here. She had both a comment and a question that I thought were really good. So Nicole, could you just go ahead and unmute yourself, and I'll just let you kind of ask it from here.
Yeah, thanks, Joel, and thanks, Christina. Great to hear more of these. I feel like this is the best kept secret, this series, so I keep expecting people to figure it out and show up en masse, but I keep spreading the word. I appreciate everybody's time here. I guess my question is, Minnesota is such it's really a prime example of a co-op culture. And I'm from Rhode Island, and we are like the opposite of that. We're local, but like people are very skeptical of these, of the co-op. There's just no familiarity with it. So I'm wondering, I know your fund has come a long way, and I really appreciate also the Reg A details and other things that help us to think about how to use some of these alternative fundraising. But how much do you think like this is replicable in other places, in that you sort of needs, in my mind, some type of critical mass to get this co-op membership fund sort of off the ground? And do you think that being in Minnesota is key to the success of this, or that this could now be replicable in some other places? I realize you're probably national now, but I'm talking about like, how do you get started, and get to a place where this gets some momentum?
Yeah, thanks, Nicole. It's nice to see someone from Equal Exchange here. We've collaborated for a long time, and actually, when we were launching our preferred shares in 2009, I spent a lot of time with folks at Equal Exchange and Organic Valley, and folks who gave us a lot. We just shared information, in such great ways. So yeah, I think that this is often the question: is how hard is it to? How can we get cooperatives and democratic institutions in places where maybe that hasn't been as receptive? I do think our base is still about 30 to 40% in Minnesota because of the long-standing members. But that is not where the most activity is. And I would say that sometimes we have seen some communities that don't have a long history of cooperatives and cooperative funds generating a lot of really creative, interesting solutions, because they aren't bound by maybe their preconceptions of what that needs to look like. And I think in Minnesota, for example, if you live in a rural area, you think about agricultural co-ops. And if you lived in the cities for a long time, you mostly thought about food co-ops. And sometimes, I think for a long time, that actually limited our imagination about what else was possible. And so there's a base of worker co-ops here, but those weren't getting as much traction as you saw, say, in Chicago or in Austin or in the Bay Area, for example, where folks maybe, they just were sort of open to what does it look like to create a democratic entity that can really be about serving the members and not serving capital. How do we really serve the people that are the parts of this institution? So whether it's a worker co-op or a consumer co-op or a housing co-op. And so I do think building on that is sort of how do we, I think it's cross-pollination across geographies, learning from the great work going on in Asheville and the great work going on in Minnesota, but not being limited by that. So I think groups like Equal Exchange and others can really help make those connections. But I think the one other part of that isn't maybe directly what you asked, but I would add about the challenges of building a loan fund is this challenge of the advantages of scale in moving money and the disadvantages of scale in building really deeply held democracy. We're not great at that in this country. We don't engage in the same ways at the national level around democratic issues. And I think I think there's an enormous opportunity at the local level to build those strong democratic institutions like community funds. And then how could we build some shared infrastructure? Seed Commons has done a version of this that's really, really powerful. I think we've worked with some local funds to help leverage our back office to support them also. And so I think there are a number of ways that we could combine the benefits of scale at a national level with the benefits of local control and ownership. And we'd love to engage with you all about that.
Yeah, and maybe it is this regionalization, right? Where like there's enough critical mass being built because it isn't a one size fits all, strategy. So I appreciate hearing that there's like a burden of your history in your place, but there's also that momentum that comes out of that. So thank you. Yeah, and I look forward to staying in touch after this.
Please do.
So in our case with Minnesota Somali refugees, we found law firms, one particular one that had done a lot of successful big co-ops, and we were doing something. It was a hybrid where you're buying your neighbor's house over time, and it was kind of interesting. And they were willing to experiment because they had enough success in things that got big to try something on the edge. So that's, when you're doing something new, that's something I look for is there somebody with a really good track record who's also not just saying, look at my track record when you're trying to devise something new. And there are some folks in the Minneapolis legal community that I would love to have worked. Our initiative was shut down by COVID. We were having 3 mosques come together in April of 2020. And but you didn't have 3 mosques come together in April of 2020. So anyway, that's how that stopped. But anyway, that's one thing to look for, I think, when you're doing something new.
I'm curious looking forward for the fund, for the impact you guys have had. Obviously, the fund's been around now 50 years. And so when if you said that earlier, I don't want to misquote you on that. But as you're looking forward, I guess, what do you see are still the challenges that lie ahead?
Yeah, we actually had a terrific board and staff strategic retreat last fall, and really we're asking that question of what's next. I think one problem is we've just had too little capital to really meet all the project needs. So we don't have to do all co-op financing at all. But even for those that are approaching us, we were turning away projects, having to scale back projects, having to cobble together a lot of sources. That takes a lot of time and creates a lot of complexity for the business. So, for us, part of it is just having enough money to get the door that folks are looking for. 2 is that there's a tremendous need for risk money that can allow startups, creative initiatives to get going. And that's not really the DNA of a CDFI fund. We could take a fair amount of risk, and we have, but at the end of the day, we also are really counting on making investments that will be repaid. And so there's some need for a pool of capital that can, make some patient, even more patient, even more risk tolerant investments. And I think we're talking with a number of the other funds and others about ways to do that. And if folks have creative ideas, I'd love to engage in those conversations. So there's that startup piece. And then the other piece is really about folks who have not had access to capital historically. People of color, LGBTQIA groups that are forming cooperatives, women, low-income folks are still not accessing capital at the same rate as others. And so we know that that was a core part of our vision for the next 10 years and beyond, is like, we need to continue to break down those barriers. How do we do that? How do we make sure that co-ops organized and led by people of color are able to access capital in the same way that other co-ops are? And so we're always looking at policies and products that we offer, and relationships and networks and support and assistance that can help level that playing field. And that's critical, and very much interconnected also with this question of startup capital, because a lot of longstanding co-ops are predominantly white-led and white-owned. If we want to really have a cooperative sector that better reflects the demographics, the racial and gender demographics of this country, then we need to create better mechanisms for helping folks access the capital they need to start. So that's our work. It'll be interesting over the next 4 years to continue to navigate that, but it's I think that we have some good allies in that.
Well, yeah, because I think a lot of times when people think about startups, we do think about the entrepreneur, kind of and I mean, a lot of times businesses are started by someone who throws the whole thing on their back and kind of does, kind of has a vision and has a dream to get things started. But, I don't see a lot of talk around what the sustaining that business long term with the vision and with the values that they have in the very beginning, and kind of the ability to, as kind of as an exit plan, to be able to transition that business over some period of time to a cooperative or to some sort of democratically owned businesses. I'm curious if, kind of from a funds perspective, did you actually, I was curious, I was thinking this earlier. I feel like some people come to this work through either they kind of are in the world of finance and in the world of lending, and they see some of the issues, and so they are looking to kind of do better. And then I see other people who come there, like myself, kind of from the language of justice and sociology and these things, and kind of move into trying to solve those issues through the world of capital and through financing. I'm curious what your sort of journey there was.
Yeah, mine is the social science student who was fascinated by revolution, and I ended up sitting in a market in Nicaragua in the late 80s talking to women who were trying to survive an insane economic time with 3,000% inflation. And what I heard was access to capital matters. And up till that point, I had zero interest in capital as a solution for anything. I thought that was the thing we were trying to fight. And I began a path of looking into people who were trying to find creative ways of moving money to the folks who are actually doing work on the ground. And as someone coming out of social justice movements, I also got very frustrated with all those going, asking for grants and asking for donations, and was very interested in how could we create capital that we could actually, as a communities, have more control over, have more, not just have access to, but actually control over, so that we could change that dynamic. So I reverse engineered into finance. I went to grad school and tried to figure out what I could, and then someone was foolish enough to hire me with zero experience into managing a little microloan fund. And thank goodness for some amazing women who had also kind of come out through community development work and were running funds in Minneapolis, because they were the ones who guided me and kind of taught me how the fund could work, and the pitfalls of doing things certain ways. And so I had an amazing group of women mentors in my early years of fund management that I owe a real debt to.
One thing that I've always been, Michael writes about a lot is the is the access to investment for non-accredited investors. And I'm wondering how that co-op model has aided you all in being able to allow ordinary people to put their money into their local community.
Yeah, I think one of the greatest obstacles when I talk to other CDFI loan funds, community development financial institutions, that it would be kind of acquisition costs, if you will. Like, how do we find the people who would want to invest so that we can do so cost effectively enough that we can take their investment? That is assuming we have a legal structure that will allow it. But let's just got the legal structure, then how do you find them? And I think that's where our cooperative structure was really essential, so that since the 80s we've had small investments and investments from individuals, and sort of captured as many non-accredited investors as the legal structures would allow, because co-ops members wanted to invest. They approached us and said, we want to put money. I mean, you're lending to our co-op. We've got a little money in my savings account. How do I invest in this also? And so we were lending, we were lending to the co-ops, and their members were investing with us. Worker co-ops, housing co-ops, food co-ops, and so on. So that co-op structure was really essential to kind of an access to a broad network of people who shared the values and already understood the work and were seeing the benefits of the dollars being available to their cooperatives. And so I think that made a difference. And because they were seeing their co-ops making the investments, they could also easily imagine making this investment themselves. And I think that is a huge factor in why it works for us and others who have access to a broad community, versus some CDFIs are just not built that way. They don't have access to people, to those individuals. Now, I will acknowledge that there are also a lot of folks who are now really doing amazing things and thinking about how they invest. And so I think that network is getting much more accessible. Shows like this being a great example of how you can do that even more. But that's part of the challenge, and it is getting easier. So I think going forward, hopefully those barriers are even less to finding the folks who care and put their money in.
Yeah, absolutely. Michael, did you have a follow-up on that?
Well, one follow-up is, I think everyone on this call is familiar with the dance between the business on the one hand and the foundations on the other. And it seems to me that with your network of several hundred co-ops involved in this, it would be a natural ask for each co-op to say to the foundations in its region, put 5% of your assets into your fund. And that way we can replicate what we're doing. And I'm curious what your thinking along those lines has been and how we could be helpful to that.
I love the idea, Michael. That's a great idea. I think we've often been caught in some of the local funds really want to invest locally, and they want to invest in a fund that is local. And again, we've made some choices to work in a broad geography, but work with organized groups within local communities, right? The co-ops we work with are the ones who are organizing themselves, and we're bringing the capital. So I don't think we've always made the case effectively enough to say, yeah, we aren't based in your community, but we have these members who are members, they're owners, and I think that's been we haven't quite messaged that right, and I don't think there's always been a receptivity to that.
Yeah, but I think
you
can create the place-based argument, because you
Yeah.
could, I mean, in a way, RSF Social Finance has done this for years, where they say, okay, if there is 40% of the money coming from the Bay Area, that's where we're going to focus the 40% of our national investment from the loan fund. And I think you could do the same thing.
Yeah, I think that's right. We're pretty dispersed, but I think you're absolutely right. And actually, I mean, there are some examples. We've been able to engage, for example, with the city of Madison, Wisconsin, that had a pool of funds, and we were able to work directly with groups there with the addition of local city money. But I don't think we've made the case to the foundations. And I think you're right that the point of contact are the local cooperatives who haven't always talked to the foundations. So we'd have to support them in doing that. But I think it's a great idea.
Foundations don't evolve because they have no predators. And so putting pressure on foundations, bad foundations don't blow up. They just write a report about how their theory of change was not reached its goal in this most recent failure. And they set aside budget for that. Let's explain our failures at X% of our, there's no way to make them do anything. The law is really screwed. As Jed Emerson said, you're looking at the wrong end of the horse when you're looking at a foundation.
Wonderful. uh, Christina, I've learned a ton in this time that we've had with you. I think the last question that I would think, like, if we've got someone on the call here today, or we've got someone that's maybe watching this in the future who's part of a co-op, and that co-op may be doing some good things, but they are realizing, like, yeah, the access to capital is really a big piece of that. I guess, what would you recommend they do to possibly, kind of grow their ability to do the impactful work that they're doing?
Yeah, I think that really thinking about building a strong business plan and keeping that alive so that they know how to get to the success, the mission success, through the business that they're running. And there are some great resources for that. And they have to hold also how do they retain the structure, the governance, the democratic structure that is core to being successful as a cooperative, because sometimes there are trade-offs that groups make about what they're doing, because they think they can't access capital, so they take on investors in voting roles that maybe wasn't the best option for them, or what have you. I mean, there are a lot of different structures out there, but I think point being, you want to make choices not based on pressure and what you think you can't access. You want to make choices about your cooperative's future based on how do you best achieve your mission, and who are the best stakeholders, and how do you retain that democratic commitment that what you were founded around. So we can help connect folks with that. We are always happy to talk to anyone who's working with a cooperative idea, an existing cooperative, one that's trying to get started. And we can help connect them to networks of great resources, other co-ops, and also talk about what would it take to get a loan from us or an equity investment from us, because we can do some of those as well. And so, what's the right option? Yeah, they just give us a call, and it doesn't cost anything. We can just talk about what's available. So that would be an easy approach.
Yeah, excellent. Any last words here for our, I know we got, there's, I will quote Nicole and say that we are definitely the best kept secret right now. Everyone out there, help us change that. Help us become a little less secretive. But for anyone watching in the future or watching now, anything else you'd like them to know, as we head out here?
There's something in the chat Mike Cio, who's with our presenting group, did of places you can find out more about cooperative funders, and it's a good list. So before
Excellent.
it goes
We'll make
away,
sure to put
take a
that
look
in the
at it.
notes. Yeah, we'll make sure to, Jen, if we can make sure to grab that link, and we'll put that in the notes here of this. You will be able to find the recording up on the Main Street Journal. We are also going to start putting this up onto some other podcast networks, and we'll be growing our distribution here in the coming months. But yeah, for right now, make sure to check it out on Main Street Journal, on Neighborhood Economics, and on Mindful Marketplace Show. And we will see you in a couple weeks. Who's our next guest
That's
coming up?
exactly what I was going to interrupt there.
Okay,
Didn't
great.
need to.
Yeah, thank you.
Joel. So just so everybody knows, you will get a recording, and you will get a link to the next Community Capital Live. So rest assured, in case you're having to go out quickly. But we have Steve Salzman of New Hampshire Community Loan Fund. He'll be with us February 26th from 2 to 3 o'clock. And then 2 weeks later, we have Leslie Watson of Northeast Investment Cooperative. That's March 26th, also at 2 o'clock. So let's spread this secret wide and let people know what's coming up.
Fantastic.
Thank
you
you
so
all.
much, Jen. Jen does everything behind the scenes. She's the reason this all happens. So let's make sure to thank her and give her a little round of applause while we're at it.
Yeah.
So
Hey,
everybody,
Jen, thank you.
Hey, Jen.
everybody, you all take care of yourselves. Remember, we are each other.
All right. Thanks.
Thank you.
Bye,
Thank you
everyone.
all. This has been fun. Thanks.